of silence. Amen. Does everyone have a copy of the agenda? I hear a motion that we adopt the agenda.
I move to adopt the agenda.
So, second, all in favor?
Aye.
I think it's just the three of us. Isn't it? Next order of business is to approve the minutes of February the 2nd, 2022. A copy is in your packet. If you would take a moment and read those. Well, we haven't approved them yet. Now, Mary, there's not going to be an opportunity for public comment in this meeting during the meeting. If you have questions after the meeting, we'll be glad to address those. No, there's not, but there will be an opportunity at the commissioners meeting and after the meeting, but not during the meeting. So. Let me know when you're ready.
Mr. Chair, I recommend approval of the minutes as presented.
Second.
In favor? Is there any old business to come before me? Okay. Then our new business is a review of fiscal year 2021 audit. And Livonia is here with Carter that will be making the presentation. Livonia, I turn the floor to you.
Okay, well, thanks. I will use the microphone. I've never been accused of not being loud enough. So I normally tell my boards, if you see me more than once a year, that's never a good thing. For you guys, it looks like you're probably going to see me 3 times in 1 year, but that's a great thing. So we are looking at fiscal year 21 back in, I can't remember, early in the year. I think it was January, February when I was out here. I don't think it was in 2020. Is it February? Okay. Time goes by so fast. So in February, we talked about 2020. Now we're moving into 2021. Couple of weeks, you're going to have your fiscal year 22 year end. We've already, worked on the scheduling for 2022. So what I want to do is your packet, I'm assuming everybody's packet is made the same. So I'm going to go over the deliverables, and actually the order that they're in is perfect because this is how I'm going to go over them. So I don't need you to shuffle the pages. So the first item in your packet is the management representation letter. And the reason this is on top is this is your representation to us. And so we kind of, clients have called this.
I don't think we. Do we have an extra copy?
That's okay. So the management representation letter is, you've given us everything we've asked for. You've told us the truth. You didn't withhold information. And, you are approving the financial statements. You've reviewed the financial statements, you're approving. Now, it's not signed at this point because we are presenting this. Management has reviewed it. You've had an opportunity to review the financials. We are presenting now to you for your approval and then subsequently to the Board of Commissioners. So that's the first one, first letter. The second letter is the internal control letter. This is what I want to talk about probably the most. It's shorter than the previous year. That's good. Short internal control letter is always an improvement. So the items that are on here, and I'll just kind of refresh your memory, is there are 3 separate levels of which deficiencies can be reported: material weakness, significant deficiency, other matters. That's kind of this order of severity as well. So a material weakness is they could cause a material misstatement in the financial statements. A significant deficiency doesn't rise to the level of causing a material misstatement, but we feel it's worth bringing to your attention. If it falls into those 2 categories, we are required to communicate those in writing. So that's where the requirement ends. And then you have one other matter listed on your internal control letter, and those are, they don't rise to the level of being reported in writing. We'll usually put it on the letter if it's something we want. If we issue a letter, we'll usually put those at the bottom. And it's just, hey, we noted this. It's not a big deal, but hey, we did note it, and you probably want to make some kind of action toward correction. And so the material weakness, the first one has to do with financial reporting. This is a repeat from 2020. And this just has to do with the accounting records and us making audit adjustments. There's no magic number of audit adjustments that we make, and we're going to look at those when we move into the next communication. But there's no magic number of audit adjustments to say you should have 5 or you should have 12. There's no magic number. Local governments tend to have more adjustments just because we do those GASB conversion entries. We're capitalizing your fixed assets. We're doing your orbit reports for your retirement, your pension, all of those journal entries. So those are typical audit adjustments. So I don't count those as being, those are audit adjustments that I say, you know, hey, you guys really need to work on these. There were improvements. So there was improvements between 20 and 21. And then I feel strongly that there will also be improvements from 21 into 22 on the financial reporting. So we will visit internal control matters at the very beginning of each audit. When we start looking at 22, the first thing we're going to do is say, okay, what were our 21 issues? Are those still around? Do we have improvements? You know, we're going to look at those. So the next one has to do with software and your software report. So I know here in a few weeks, besides ending your 22 year end, then you're gonna so you start software on 1/1/7/1/22.
Correct.
So you're in the process of remedying some of these. Implementing a new software is difficult, and I understand that, and I know the undertaking. So Darlene, I feel you. I know how difficult that is, but it will help some of these reporting. It's going to help Darlene. I hope it makes her life a lot easier, just because the software is outdated. It's hard to get information out of the system and to get accurate financial information.
And for clarity, next year, beginning July 1, 2022, Darlene will be running dual accounting systems. So it's going to take a tremendous amount of time on her part to get everything in both systems as we go along. So just so you know.
Are you taking a vacation in June? So those were the 2 material weaknesses. Then significant deficiencies related to segregation of duties on cash receipts. When you have a small staff, it is almost impossible. I say almost. You can, there's workarounds, but it is almost impossible. So segregation of duties is probably the most common internal control point that we make. And I kind of, when I say nonprofits and local governments are kind of lumped into one from our perspective. And there's only a handful who were able to overcome this segregation of duties. It's just because you don't have the resources, and this is how most effectively to operate, to do your operations and get your transactions in the records. But there are, with recording disbursements, reconciling bank accounts, check signing, and all of that. So there is a segregation. The final matter that was noted, again, is one of those other matters, and just picking up the incorrect payroll amounts for Orbit. Going in Orbit is the retirement system for local governments. And so picking up the wrong payroll took a little bit. I believe that was in December of 2020 took over till about April of 21 to get all of that worked out. So, but before year end, it was remedied, and all the correct information was in Orbit, and all the correct amounts had been remitted.
Thank you.
Any questions? Okay, next one. The letter to those charged with governance. So this is a required communication. This is a deliverable with each and every audit that gets issued. So an internal control letter, if there are no material weaknesses or significant deficiencies, is not required. But this particular communication is required for every audit that's issued, whether it's in accordance with GAAP or another base of accounting. What I want to note on the letter
Annabelle,
is
what did you call this letter? This third one?
a letter to those charged with governance. So a governance letter. So at the very bottom of page 1, we noted that we had no significant difficulties in dealing with management and getting to complete the audit. So if something were to go sideways with the audit and we were not able to get satisfied at the management level, we would call on the audit committee. You would hear from me. That's why I normally say, you don't want to see me or hear from me usually other than once a year. So no difficulties or with management. On page 2, we're required to disclose to those charged with governance, so you, the audit committee, any corrected or uncorrected misstatements that we post in the audit. So that would be any audit adjustments that we post or any misstatements that we know exist and we choose not to post because they're not material. You will notice on here that there was one misstatement that had to do with accounts payable that would have decreased net position. It was about $7,000. We know it was there. It was immaterial. We did not post it. And then in the middle of the page, disagreements with management. We had no disagreements with management over accounting principles, the auditor's opinion, or anything throughout the course of our audit. Again, we would have called you should that occur. So the very last page, are the corrected misstatements. So I mentioned on the internal control letter about the journal entries. So these are the journal entries that were posted as a result of the audit. So there's 22 entries. And for 2021, there were 27. So I said there was some improvement. Again, there's no magic number. Typically for a client, I think we have 2 clients that we don't post any journal entries. So 2 out of 100 where we post no journal entries. And that's because they don't have fixed assets. It's a small nonprofit with no fixed assets, so we don't record depreciation. Every other client, just about, we record depreciation or we record something. And so some of these, if you're just kind of looking through, you can see ledgers mentioned on there. You can see the law enforcement officer special separation allowance. That's the Leo SSA. So some of these recording depreciation, moving capital expenditure, some of those are typical audit adjustments. It's on page, it should be on the very last page of that. You should see listing of, there you go. So you can see the net effect of those was about $36,000. So then on the change in net position, so I'm looking up in the far right column. So the net effect of those wasn't terrible. It wasn't that much. So $36,000. You can see some of the individual items, $80,000 worth of depreciation, $50,000. Some of those are ledgers. So some of the larger ones, rolling forward fund balance, that's one where we wouldn't expect to make a fund balance adjustment. Again, I think it's your software. So I think changing software is going to help the fund balance and the way the software is rolling forward the fund balance. So anyway, that it is required that we list these out for you. So you can kind of scan through those and see. And then it's summed by the net audit difference, your totals on your government-wide statements, and then a percentage. So obviously, when you, like, if you're looking at the total for revenues and expenses, when we're rolling forward fund balance and you've got, the revenues and expenses and trying to roll forward, it can artificially inflate those percentages, but that's what happens when there's a fund balance adjustment.
Now, Livonia, most of
Yes.
this was already in the big report that we already had. 'Cause
Yes,
As
so
I went through, I saw,
yes, ma'am. So if you were to take your June 30, 2021 internal report, you would need all of these adjustments to get to the audit. So all of these are already included in your final numbers. Okay, the financial statements.
Livonia, let me
Yes.
just ask you this.
Absolutely.
Does the state treasurer's office feel the same way that you do about all of these matters in terms of the enormity of them or the lack of enormity of them?
I don't know the answer to your question, but in my 22 years in public accounting, I guess I'm coming up on 23 in a couple of months. I've never had the local government commission make a comment on the journal entries. They will ask questions on your internal control letter.
Yeah.
But they've never made a comment on the journal entry. And they do get this report. So in most cases, it's a restricted use report, but we have to upload it as part of the LGC's audit package. They want all of the letters.
Gotcha. Thanks.
Mhm. Okay, so financial statements last. Please don't be disappointed. I'm not going to go through every single page of these 100-page financial statement. What I really want to do is hit some highlights, and I can call out page numbers if that's easier for you to follow along. So the page numbers should be at the bottom with the exception of the audit report. And that's where I'm going to start. So it's about, I don't know, 10 or 12, 15 pages in. It will be after the Roman numerals. Is where we're going to start on the audit report. So we gave an unmodified opinion. The opinion is on page 2. Your audit report is 3 pages. I'm going to tell you your audit report is going to change for fiscal year 22. The opinion moves first onto the report. There's a new audit standard that was effective for calendar year 21. So this audit report looks significantly different. But it is an unmodified audit opinion. So that's the key. That's really what you're looking for. I don't want to undermine. Yes, we're trying to get everything called up. We're trying to get, undermine the internal control points or anything else, but it is an unmodified audit opinion. So we made audit adjustments. There was nothing in the accounting records. There was nothing missing of significance. There was nothing that we were not able to inspect or observe that would cause us to modify our opinion. And then on page 7, one of the new GASBs, so Government Accounting Standards Board, governs governmental financial statements. There was GASB 84, which had to do with fiduciary activity. So your agency, previously you had recorded your MSD, where you are the pass-through basically for Metropolitan Sewer District, was reported as an agency fund. But GASB 84 said there's no more agency funds. So if it falls into these classifications, and there were different classifications that we looked at to say, how should you treat it? Should you treat it as a fiduciary fund? Should you include it in your existing proprietary fund? However it falls, because basically MSD is you are just the pass through. You collect the funds and you send it out. So you hold the funds for a very short period of time. And therefore, it was able to be considered a custodial account, and just it's recorded within your water fund. So you probably notice that those agency fund statements were eliminated from your financials. We saved a couple of pages, but we eliminated that. Let's see on page 9 is where I had an extra comma. So that's not, we don't need to look at page 9. Page 13. Page 13 is your statement of net position. So this is your government-wide. This is your overall government. This has your governmental activities, your business type, and then your total. So your net position in the bottom right-hand corner was 7.9 million from a government-wide standpoint, which was an increase of about $325,000 between 21 and 22. So we had some discussions back in 21 about the fund balance and net position and everything kind of trending up in the right direction. So net position from a government-wide standpoint is up about $325,000, which the ins and outs are on the next page on 14. So it really breaks down. And I think governmental financial statements can be confusing if you're trying to read them, because they tell you 15 more times, but it's never in the same format, and it's difficult to read. So really the far right hand columns for governmental business type, and then the total kind of tells you what you're looking for. So near the bottom, you've got your general revenues for both your governmental and then your business type. Those, it doesn't take into account like your charges for your water, which are all up on the left hand. Again, this statement I think is probably the most confusing in the whole set of financial statements. But really, the third from the bottom line is kind of where I would spend my time if I were looking at this, the change in net position. So your governmental activities was about $264,000. Your business type, so your water fund, about $63,000. With your current change in net position, there's the $327,000. So your net position for 2020 was about 3.6, and now you're up to that. I'm sorry, it was 7.6 up to 7.925 in 2021. On the next page. So the next page, when you're really looking at your governmental funds, so this is where your financial statement starts breaking down, and you can see specifics to your general. And I think that's where most local governments, while you have some capital projects funds and some non-major funds within your governmental activities, your general fund really is, this is where you focus. This is where your money's coming in and out. So your fund balance in your general fund, ending fund balance about $725,000. That was an increase of about $30,000 over the previous year. The unassigned fund balance increased. As your fund balance increases, your stabilization by state statute, the $176,000, that fluctuates based on your financials, and that is governed by the local government commission. So that is a state statute. It is a calculation based on your financials. There's a template online that you can use to calculate that number. We go pull it, and that's how we get that number. So let's see. Next page on 16. So another thing I don't like about governmental financial statements is they're not comparative. So it's really hard to say, how did we do compared to prior year, unless you try to look in the MD&A, the management's discussion and analysis, which it's not exactly in enough detail. So I used a set of the 2020 financial statements. So total revenues in the general fund for 2021 was $1,956,000. That's up about $281,000. So almost $300,000 increase in revenues. From 2021, again, there was an increase in property tax rate. Also in that restricted intergovernmental, the $242,000 is some of the reimbursements for the flooding that you received. So it's tucked in there in the revenue. And so total expenditures in the general fund decreased about $468,000. Again, you've got your debt service payments and your capital outlay is all included in this number. So capital projects, as you know, when we talked about 2020, capital projects really drove the financial results in 2020. So now as we're coming out of a lot of those capital project expenditures being reported in your financial statements, you're going to expect your financial trends to increase, all things held equal. So
And that's primarily because of the two capital projects that we're engaged in 2020.
that was correct. Yes. Major capital projects.
Major.
So
Very.
we're not just talking, buying cars or copiers or anything like that. So expense, revenues increasing, expenses decreasing. So the excess of revenues over expenditures was about $480,000. So, and then when I mentioned the fund balance increasing 30,000, you can see that in the column there on the left. Where's the next tab? So my next tab, this may not be as important. On page 23, this takes you into the notes, and near the bottom of the page under the water fund, this is where we're explaining that you're collecting money for MSD and then you're holding those for that short period of time. So we're telling the LGC, yes, we had an agency fund last year. We in what we looked at earlier, we said it was a fiduciary activity. It's a custodial account. And here's why we're calling it a custodial account, because those funds are typically held for less than $3. Next tab. Next tab is on page 31. This might be the most important, pages 31 and 32 on the financials. So this is where, if there were any issues noted in the financials or any budget violations, anything of that sort, this is where we would have to report those. So at the bottom of page 31, we talk about the over expenditure of about 159,000 in the over expenditure in the general fund for those capital transfers. So again, even though it's transfers, it is required to be a budget violation. And so you can see your explanation. And so this is where you can tell your story. And again, I know the LGC is probably going to send another letter, because they always send another letter. And once we get past 22, I think you're going to see these all go away. Once we get the non-compliance with the fund balance policy. So as we're getting out of those capital projects, I think we're going to see this number trend toward in the right direction. So the top of page 32, the fund balance policy is 35%. As of 6/30/21, we're now at almost 30. So again, that is required to be disclosed. And then the late audit. So audits are due October 31st. That is a statutory deadline. The LGC has an unspoken, well, actually it is spoken now. They have it printed on their website, but you have until December 1 to get the audits. But now that we're finalizing in 2022, then that is required also to be considered non-compliance.
So we will get it submitted by October 31.
We have everything set up on our end to make sure that happens. So if we get everything we need and we're able to get the audit, if we get all the information timely, with the software conversion, I know it's going to be a lot of work, but we have everything set up on our end such that we can get it finished by October 31st.
Excellent.
I think you can hear me. But there will be more entries,
Adjusting
adjusting entries,
between now.
definitely for the next one, because I
Oh, for the
will
next
be in the middle of running parallel systems. So
So
I will have the trial balance absolutely to them by whatever deadline we come up with, so that we can have the financials done by October 31st. However, there will be more adjusting entries, because I will not be able to do all of them to get that deadline.
As soon as, so the way we work with our local governments, because all local governments are due October 31st. So that's the statute. We have some that, because of USDA loans, they absolutely have to be finished by October 31st. So it's not the LGC requirement. They have a USDA loan that requires, that particular loan requires them to have it in by October 31st, or they are trying to do another financing, or we have a couple that's due October 31st. So as soon as the LGC issues their templates for financial statements, last year they issued it the end of June. We check probably every other day. 2 years ago, or I think it was 2 years ago, it was not issued until September. So we have everything set up on our end. If the LGC delays us, I will be sure to let you know that we don't have what we need from them. So it would be very difficult to honor a commitment to the LGC if they haven't, because their template, they issue sample financial statements. And your financial, it's a thou shalt look like this deal. And so we have to have our financial statements look like City of Dogwood is what it's called. So as soon as it's issued, we are drafting financial statements. Every chance we say, okay, City of Dogwood is out, this person's doing Montreat, this person's, we're making sure that we're getting the templates updated. Most of the time they highlight the new information so we know what to go look for if it's needed in those sets of financial statements. Assuming the LGC issues on time and doesn't drag their feet until the end of September. The year that it was the end of September, 0 local governments were issued by October 31st. 0. It was just not feasible at that point. And that, that was something we just had to deal with on the individual government basis, and the governments who needed to have those to USDA said, we're at the mercy of the LGC. So, but hopefully that doesn't happen. And we have everything set up on our end to make sure we can get it done by October 31st.
Thank you.
The last note I wanted to highlight, and then I want you guys to ask questions, is on page 49. And this is the fund balance policy. So since we talked about the violation, so this is the fund balance policy. So it starts with the fund balance in the general fund. It subtracts out any of those restricted items or the state stabilization by state statute, and then arrive at what your remaining fund balance is. And so that's the number we're working toward, moving into a positive number. So right now we've got minus 82, almost 83,000. So working into moving that into a positive number. Are there any questions on anything? And I know that I left a lot of the financials out, but some of these are really just kind of routine schedules, especially some of the required supplementary information in the individual fund schedules, and in the statistical section, which is information provided by you. So is there anything in the statements? I think you mentioned you found a typo. If you.
Well,
Yep, I did, but if I had it numbered by page, it was in the IIs after.
Okay, so it's in the Roman numeral section.
There's an or and an or and an and. So it's not. It was on page 3 that I got in an email. No, it's page, yes. My computer,
Yeah.
look at it.
And that's, we haven't
It was-
issued this statement. So it's in proof form. Yours is watermarked proof. Mine was printed just directly from the printer. So it is in proof form. So it is up to for your approval. If there's something you see in, if there's something you want to add, as long as it's not misleading. But a proof means we've gone through our internal, we've completed the audit documentation. It's gone through two levels of review. I've reviewed the financial statements. We've sent them to management and for you to review, and we're ready to issue. So we've done everything by professional standards that we're ready to issue.
I think I can safely say that we have all reviewed the draft, and it's our intention to approve this at this meeting. That said, I know that available fund balance is of particular interest to the public because there have been questions about it at several of the commissioners' meetings. And so there's several things I want to say with regard to available fund balance. You will find on page, well, first of all, let me say that the budget has been amended numerous times over the course of 2021. The expenditures in 2021 were approximately $300,000 under the budget. So that's significant in my opinion. The town has been diligent in trying to reduce cost and increase available fund balance. There are two percentages that are in this book. One is on page 10, and that relates the available fund balance to actual expenditures. That's not what the statute calls for, but that is a percentage of 31.55% of actual expenditures. Available fund balance as it relates to the budget is 28%, and that's found on page 32, an improvement from whatever it was in fiscal year 20. So I want to be clear, the town's done a good job in controlling expenses. We have improved, although we're not quite there, we have improved available fund balance relative to the budget, which is found on page 32. And I think it's pretty impressive that actual expenditures were $300,000 under the budget for this year. Now, are there other questions with regard to the audit before we move to approve this audit?
Livonia, just back on page 49, looking at that fund balance. So the delta there, the negative delta, the 82,000 is where we are in regard to our stated 35%.
Yes, because the 568,000, so there's your working capital fund balance policy. So that number is calculated based on your percentage. And so then all the other items, so then you flush that out at the bottom.
Right. Okay. Gotcha.
That's what we need to approve. Available fund balance. Fine.
Well,
Fran and I talked about the breakdown for page 49. And our last conversation, we agreed that the 20,115 for committed open space should be listed there because in prior years, it has always been considered part of, not restricted, but money's not totally available to us. So adding that 20,115, it brings the remaining fund balance to a negative 103,031.
Okay,
I'll show you the breakdown.
Okay, I see the committed here for 20,115.
are you on page 49, did you say?
Yes, she's on 49, that a 20,115 is missing. Okay.
So instead of 82, it's 102 or something.
I'm gonna pull this page out of my copy and I'm gonna pull the other page out that had that extra comma. So I'll make sure that those changes get made. She must have missed that change when she made the updates.
I didn't even realize it was on that page.
Yeah, I could fix that.
Thank you.
Any other questions?
Will that cause any subsequent changes to anything else?
That will just, that note doesn't flow through to anything else. So that will just be this note.
Are there any other questions for Livonia? Do I hear a motion that we approve this
With this change.
with that change? That we approve this audit with that change?
I move to approve the audit with the change on page 49 to add 20,115 to open space.
I second that motion.
All in favor?
Aye.
Okay. That concludes the business today. Do I hear a motion? We adjourn the meeting?
So moved.
Second,
All in favor? Aye. Meeting is adjourned.
Mary, can we keep that paper instead of you walking out with it? Because no one else is getting it but you, and I think that's unfair.